Welcome to another episode of Investing Counterpoint here. And Danny, you said this yesterday, and I thought it was pretty funny. Like Liberation Day was liberating all U.S. consumer or U.S. investors from capital gains taxes. So we are liberated from that. But we
Yeah,
needed to
by
do
removing the gains themselves.
by removing, yeah, and that's the way you do it. You remove the gains. There's no capital gains taxes. Um, this is a pretty, steep 2 day decline. We're recording this on Friday, April 4th, and we've had a lot of our clients reach out and say, ask us what they think is going on because obviously we do a lot of risk modeling and things like that. So we're not going to go through and do a lot of what the other economists are doing about analyzing the tariffs and analyzing like how that math works and all that kind of stuff. There's plenty of places where you can get that information. Daniel, actually, we were talking this morning. You had a really interesting theory that I had never heard of before. I don't know anything about it, but I thought it was interesting enough, and we thought it was interesting enough that maybe we should kind of talk about this because it's, requires some research, but it's something I'd never heard. So why don't you tell
Yeah,
us?
yes, because I'm a student of history of economics and financial markets, but of history in general, I think there are some, the way I think about all of the markets and the world is, I try to have different models and look for ways that they're actually falsified. Now, there's philosophy of Karl Popper, the falsification as the criteria for scientific method. It's not that strict, but still, when you have a model in the financial markets, especially where it really hurts to have a wrong model of the world, what you want to do is you want to always try to like basically invalidate it. You want to be the enemy of your model. And I was trying to analyze this situation for a long time now, for months and a couple of years actually, trying different models on because and this veers off a little bit off of finance, but not much. And I think the conclusion will be very practical. But we're seeing right now liquidations, blood on the streets. Lots of things are dropping, right? The tariffs turn out to be way higher than everybody expected, and they're calculated in this way that essentially, if you think of the assumption, and there's lots to argue. Like first of all, personally, I'm all for bringing manufacturing back to America. I think it should be done. But probably to bring back manufacturing, you should have prepared, like people can't move factories in one day. So if you want to bring back manufacturing, you have to announce a date like a year from now for tariffs and say, hey, you have 1 year to move your factories. What's happening right now is these tariffs are so punitive and they're calculated based on the assumption that the only proper trade balance is neutral balance, right? No deficit, so equal trade, which makes sense if we forget that United States is a reserve currency, that United States exports dollars to the world. When you are a reserve currency, you kind of have to run deficits. So the real way to think about it right now, people think about tariffs and trade wars and tit for tat. But the real way to think about this is a financial system is that essentially the way that tariffs were calculated, they are sort of implying that US doesn't want to be a reserve world currency. That's actually shocking to me. Now, even though I think I understand what's going on, yeah.
Okay, hang on. Let me back you up there because that's an important point. Why do you say that the way the tariffs are calculated implies that the U.S. doesn't want to be the reserve currency?
Yeah, because you saw two columns in those pieces of paper. It's called retaliatory tariff and the tariff that's levied on America. But the tariff that's levied on America is not a real number if you didn't know. If it says like
90%.
34%,
Yeah.
it's not actually 34%. It could be 2% or 5%. It's actually very hard to calculate, really. You need to spend some time for each country and calculate the weighted average of all the levies that they levy. In fact, the way it was calculated simply, if the trade were equal, right, to make the trade equal, the trade balance equal, that would be it's like an implied tariff rate. It's like
Yeah.
implied volatility in Black-Scholes, the wrong number to put into the wrong formula to get the right price. Except in this particular case, the formula is really wrong. It doesn't take into account of, and again, I am for protectionism generally personally. Now I know you don't agree, many people don't agree. I am for protecting your industry, bringing back manufacturing. That's not what I'm arguing about. What I'm just saying is, and again, I'm not even arguing about anything. I'm saying the implication of this. when you say, as that table implies strongly, that the only trade that the policy that we can have is when we have no deficit, that implies that you do not want a reserve currency, because a reserve currency implies that you print the currency for the world, and then basically you have to run deficit at that point. You have to, like, you have, because you're not going to give away that currency, right? You're not going to just print dollars and throw them off the helicopter in other countries. You basically take the dollars and you buy something with it. And because now you printed a piece of paper that's like $100 bill that costs like 19 cents or 29 cents to print, and you have to buy $100 worth of goods with it. If it's your reserve currency, if you really wanted for it to be a reserve, it has to get out to the world.
Right.
For it to get out of the world, that you have to kind of buy stuff, and that's why it's basic, really, really basic kind of logic and math, that if you have a reserve currency, you have to run trade deficits. It doesn't work the other way. If you want to remove the trade deficits, which is what that table says, our goal is to remove them. That's saying we don't want to be a world reserve currency. Again, I'm not judging in one way or the other. Maybe in some ways it's going to be better for Americans to not have a reserve currency. Actually, an argument could be made for that, because, for example, right now, there's a lot of beneficiaries from trade, but let's say an iPhone that's made in an Apple factory, probably there's like $15 of labor, or I don't know, $30 of labor that goes into it. Now, in America, it's not sold for like $200, where the cost, I don't know what the cost is, but I'm just throwing out numbers.
It's a
There's a huge
thousand.
profit margin. But where
Yeah.
does it go? It doesn't go really to American workers. It just go, but it doesn't go to China either. Only a small fraction goes to China. Almost all of it goes to corporations. So really, like, there's people don't understand what's going on here. Is that the real travesty here is really not necessarily just China. It's the corporations that will pocket all the difference. Okay. Now, going back to this announcement, these tariffs are very punitive. They basically say we don't want to be a reserve currency. We want to go back to the way before that, where our trade is fully balanced, and that will bring the manufacturing back to America for sure. But that will cause a lot of other things. And as an this is an investment podcast, not a political one. What are the investment implications? There are a few. There are a few. First of all, if the U.S. Has decides to do away with the reserve currency status, which to me is kind of shocking, right? I don't think that that's fully the intention, because otherwise a lot of things don't make sense. Like Scott Bessent recently said that we want to use stable coins. It's like it's such a senior.
Yeah.
Basically, you get a privilege of getting stuff for free. I don't know why it would be given up. So, but if U.S. wants to change the system, right? What I'm seeing is it's very, very, very serious, because look, we have serious consequences already, and then now the retaliation starts, and it's not so easy to bring it back, to rein it back, to say, oh, now we're going to negotiate. If you pissed off people, there's a lot of things tit for tat, and this will go on for a while, I think, at least. Now, the next thing that's really important, in 2024, there was an economist, or a couple of them, in November, that wrote these articles, that made these quotes that that was very interesting to me, and I started thinking about it. One of them was Freya Beamish. It's a chief economist at T.S. Lombard. I have not heard of The Economist, and I don't know T.S. Lombard very well. But the logic is this: that if you want to have a trade balance, then the tariffs will not be enough. Well, maybe these tariffs will be enough. I don't know, because they weren't thinking of these kinds of tariffs. But really, you have to go to capital controls, and that is the real game changer, because the whole world financial system is predicated on U.S. having an open. That's one of the requirements of the
Right.
reserve currency. One is running a deficit. The other one is having an open financial system. So, Chinese and Russians and whoever can come to America and buy stuff and buy real estate and invest and so on. That's kind of the world we live in now. If you really want to get the trade under control, then you implement capital controls. And I saw articles that advisors to Trump are basically saying that it's possible. An economist in 24 said that it would be extreme, but it's possible. Now, Now let's think about this. What's happening today? If we look at the markets, I don't know if you have the charts up. I
I
don't,
do.
but
What do you want to
the
know?
let's say Nasdaq is going down dramatically,
5.5% today. Yeah.
but Bitcoin is not. And that
Nope.
is crazy because lately Bitcoin has been highly correlated to Nasdaq.
Yeah.
How do you explain that? And the way I explain it is exactly that the market realizes the capital controls may come. What is the ultimate asset that fights capital controls? It's Bitcoin. It is Bitcoin. And so I think that we saw that if you look at the charts of Bitcoin price increases and tightening of capital controls in China, it would always go up. Now, if US tightens capital controls or even implements some of them, just some road bumps for very wealthy people to bring capital to rebalance trade, because they will rebalance trade, because if they can't bring the dollars here, then they're not going to sell for dollars, because why do they need them? To them it's just a paper, right?
So just real
So
quick, here's the
yeah,
chart of Bitcoin over the last month, over the last 5 days. But your point is that from, basically here to here, it's not exactly up, but it's not down either. I mean, you got
right.
gold
And
down seven or eight
it's not
percent,
going down like
silver's
Nasdaq today and
well,
and,
no,
and
and not
yesterday,
even
right?
like gold. I mean, gold's down like 4 or 5%
Yeah,
since
that
this was announced.
exactly why. So let's think about this. If we're talking about uncertainty, gold is typically a hedge for uncertainty. And the explanation is, why is gold down? Well, it's down. And if you open any YouTube channel, they will tell you that gold is down because people are liquidating everything. They have margin calls, so they liquidate everything. But then how come Bitcoin is not down? Do they not own Bitcoin? They do. Why is it not down? And the only explanation is this: people understand that capital controls could be next. I'm not being Cassandra, I'm not predicting it. But if capital controls happen in America, Bitcoin will do very, very well. And I think that is what's starting to happen. Whereas gold, traditional safe haven asset, it's good for everything. It's good for almost any type of risk except capital controls. Why? It's very hard to carry out of
You
the
can't carry
country.
it. Yeah.
That is why, like, people ask me a paradox, why in China is the government that's obviously very, very oppressive government? Why are they encouraging citizens to buy gold and silver when in China there's no more cash left? They don't use cash because everything is payment with your phone. It's all connected to your identity. You say something wrong in the chat or on social media, your payments don't work. I mean, it's reality. Why would they be encouraging people to buy this ultimate non-state asset like gold or silver, independence, real money? Well, that's why, because in China they realize that they implement capital controls, capital is fleeing the country. What you really don't want is for people to take buy Bitcoin. What you do want is to buy, okay, go to gold, fine. Even gold is better because you can, we're not going to let you take it out
Yeah.
at customs. So I think that is one of the reasons. And I'm a big, I love silver. I think it will still do massively well eventually because the end game will happen. But in this particular situation, Bitcoin will shine. That's where a lot of the people who really crap on Bitcoin, like Peter Schiff and all, they don't really understand this property, that it's highly movable money, highly movable. Because there's no such thing really for money, there's no such thing as intrinsic value. I mean, again, gold is great, but what is the intrinsic value of gold? What do you do with it other
Yeah.
than jewelry? There's not. It's a thing that has perfect properties to be money. And that's all it is. It has certain properties that it satisfies: fungibility, limited supply, and so on and so forth. But gold really lacks in transportability. Silver, even worse, because bulky. Bitcoin maybe lacks in some other areas, but it's incredibly transportable. And we're seeing this breakup of the world. And I leave you with this one thought. That's actually nice trivia. I think that what we're seeing, not exactly like, but it's similar to what was described in a movement called technocracy in the 20th century. There was a movement that was funded largely by later by Rockefeller. It was advocated by Zbigniew Brzezinski and Kissinger and many others. This technocratic movement was had its founding, in the 20s and in the 30s, and one of the leaders of the movement just happens to be coincidentally grandfather of Elon Musk. His name was Joshua Helderman. He was eventually actually arrested, I think, in Canada, but it was during the war because of the because the program of technocracy carried within it kind of radical transformation of society. He wasn't like committing any crime, he wasn't like trying to take over power, but I guess they were just afraid. It was such a powerful movement and methodology that really aimed to remake the world. And in that world of technocracy, really the world is separated into zones. They're called technates, okay? And you can read it. You can read all about it. This is all open documents, nothing secret. And in it, for example, they had a North American technate, right? That would be U.S., Canada, Mexico, Greenland. Just happens to be those kind of countries here. And in those technates, the design was that they're completely separated. There's no capital movement. There's very little communication. And what you notice here in the world is actually there's a lot of that. Like if you think of Europe, they're trying to remove all non-European social media. Even stable coins, crypto, Europe wants to have kind of its own, and they're much less warm to crypto. America has its own, but Bitcoin, for now at least, is the one that rules it all, right? It's kind of a ultimate capital. It's the ultimate anti-technate, anti-capital control asset. So I don't know what will happen. I do think that over the long period, in this case, long as 1 year, I don't even think about later right now. Bitcoin will do very well because whether we go to this kind of capital control zones, technate stuff, or if we stop part of the way, Bitcoin will do well. I also think other US based cryptos will do well too. The
Hmm.
cryptos that are less crypto, more like a state type currencies like XRP or Hedera tokenization currencies, they will do well because they're geared, especially things like a Hedera, they're geared toward much more toward America. They're geared toward a separate. If you notice, they barely ever even go outside. So Bitcoin will be the capital control tool, and then I believe there are going to be cryptocurrencies that are more focused in parts of the world, and those are going to be other than Bitcoin. Yeah.
Wasn't Hedera one of the ones that was supposed to be like more of a global? What's the one that's the Swift system, like
XRP is more of
essentially
a global one,
XRP? Yeah,
XRP. But XRP is also, I think that part, the XRP is meant to be like a crypto kind of blockchain Swift, and that it will still happen. I mean, even if you separate the world into zones, there will have to be some movement. I'm not saying there will not be any movement, it will
yeah.
just be highly controlled. What they want to prevent is arbitrary movement of people that are arbitraging the world. Hey, it's too tough here, I don't like these restrictions, I'm going to pack up and move. No, 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 stay put kind of. And again, I'm not trying to scare people or say for sure, but what I'm saying is that when you're looking at the world, you have to have a model. And if your model doesn't explain the world, you have to look for a new one. And I think right now most people are in shock and they're amazed. And I'm not saying I knew all of this. I thought it would be less dry. Quite honestly, I thought that the whole separation into zones will happen a little bit later in the year. I thought first they're going to do like a bull run, but who knows, right? Why? But what I'm trying to get across to you, despite all the noise, despite the blood on the streets, and despite some of the really things that seem inexplicable, and it's the huge tendency when your model doesn't work, a huge tendency is to say, well, they're just stupid, but they're just unprofessional. I really would caution you to not think that way because you should think about that probably it's not stupid, even despite maybe some of the external kind of facade. There's some plan here. No way this would be done on a whim. This is a massive decision. Even if those tariffs will be walked back some, they will not be walked back all the way. And then nobody can back now because they're going to lose face. Everybody's like upping the ante to a degree. And the other thing is, if this was simply about fixing the manufacturing, the way to do that would be not to implement the tariffs on the whole world. you know you don't want to like fight the whole world at once. What
Right.
you want to do is you want to pick certain battles, and what you would, and I'm sure that people in the Trump administration understand that you would set like a timeline, say here's 1 year, move your factories over. I mean, we're giving you 1 year. We're going to gradually increase it or something. And then don't do the whole world because some of these countries that you put tariffs on, they have nothing to, like, they're not really, there's not even a trade going on. Like why do you even, why alienate all these countries?
Yeah, yeah.
So I think the only explanation has to be that this is a top-down major decision to remake the world financial system. That is the only situation in which this would make sense.
Well, that's a lot, but it's a different perspective that I haven't heard out there. So I think it was important to get out there. It's not one that I had heard or read about, or I mean, other than the obviously the Bitcoin being the currency that you can kind of take anywhere, and that's one of the arguments for it is that it kind of gets out of the system. But remaking the world economy, making America not the center of it in a sense, is a big choice. I mean, that's a big deal. And I don't know how that'll work out. I don't know if there's a going back. I mean, this might have been a good theory back in the 30s and 20s and even the 60s, but now I don't know. We'll see.
Neither do I. I just, when Arthur Conan Doyle wrote his excellent Sherlock Holmes books, he had this saying, which was from my childhood. I loved, and I think that it's applicable in a wide variety of situations. Basically, Sherlock Holmes said that once you really thought about it and used all the evidence to exclude the impossible, whatever is left standing, no matter how shocking and improbable, is it likely.
I mean, that's part of what we do with stress testing a lot, right? Right? It's not exactly what's
Yeah.
going to happen, but it's like what's possible. Get rid of the impossible, what's possible, and sometimes even, what's possible surprises you. What's
Yeah.
possible, like these tariffs are, far beyond what people were thinking was possible.
And write in the comments if you have another theory that explains what's going on, because I don't know of one. Because when I go on YouTube and watch all these bloggers, there's a lot of shock, there's a lot of dismay, there's a lot of kind of analyzing of trading and liquidity, but I don't see. And then there are going to be some who will say that, well, this will fix the manufacturing, but it doesn't. It's not going to fix it for a long time. There's got to be another reason. If you have another theory, please write in the comments. Or if you think I'm full of crap, do that too. Happy to argue with you.
All right. Thanks, everybody.
Bye.
Bye.